Hi, yeah. So we're trying to wind it down for August. Doesn't always work that way. The market can do crazy things in August. Doesn't happen often, but a couple of weeks ago, before August started, I was talking about a couple of instances. I think 2011, 2010, where the market got wild in August to everybody's horror, because we're all trying to be in places like this, which is called the beach. Anyway, not a huge amount this week. Just the big trade that we were talking about yesterday is going to be Nasdaq short, oil long, and that's been working very well since mid-July. Uh, in fact, even on a 52-week view, oils have actually outperformed the Tech Select and the S&P, believe it or not, on a 52-week view. But of course, this year it's been a tougher story until we got into this past month or so when oils have been on a tear, basically because Saudi cranked up the oil price and everybody started to get worried about the reemergence of inflation as a result of higher oil prices, especially depending if we go higher from here, which might be a bit tricky. Saudi's done everything it can. Russia's done a fair bit. The refineries are not running too well, which is not helping demand for crude. And Saudi's budget break even is 85, so they're kind of in a good place. Will they push it to 95? Well, they're effectively trying to do that because their cuts are extended through September. The problem with the oil market basically is the whole thing rides on China. And so today, and you look at the IEA numbers, it's like 70% of growth in the second half is from China. So today, when you get a couple of negative China prints, what you're going to see is the oil price sells off, which immediately ruins my call that I made yesterday that we like the short Nasdaq long oil trade, because, of course, immediately the exact opposite thing starts happening when the oil price sells off. But that's not to say that it won't work. In fact, I have a superstition, and the note was called Fishing and Superstition, whereby if a call works on the day that you make it, it's going to be a bad call. And to that extent, I'm not too worried about today's action in terms of looking like I'm wrong on yesterday's note. I still think that basically oil's going to be lively through Labor Day and probably into September based on distillate inventories being low. Saudi cuts continuing through September, and as a result, the market's going to be worrying about the implicit inflation because, as I showed yesterday in the note, wholesale prices, gasoline, wholesale prices of diesel are way higher than what we've seen at the pump. It's more like double. So essentially, we've had a 10% move at the pump price, 10% move in distillate prices, diesel prices at the pump, but over 20% moves in wholesale gasoline and diesel, and that has to work its way through. It will work its way through, it's guaranteed, to the pump, and that's going to kind of show up in inflation, although we've all learned that oil is actually not the biggest component by any means of inflation and often is stripped out. And so yesterday I was debating shelter, which is the biggest component, with the Case-Shiller house price index now rising. Shelter is not coming off as fast as it needs to. It's 40% of CPI. And I highlighted a note from the San Francisco Fed, saying that their model shows that we could go negative on shelter by mid-2024. But they're using like Zillow data, and it's not very clear how the model works. But anyway, they do expect a significant slowdown. One mildly amusing aspect of their model is that it used data through April and then forecasts June, July, and onwards. And in the more tight model, let's say, the model is already showing too much shelter inflation versus what actually happens. So basically, it's already wrong within a month. Not by a lot, and the dynamic is negative, so they're not wrong directionally. But it just shows you how much uncertainty about what happens to shelter prices is going to do for the inflation trade. And the reason we're whacking on a lot about inflation with the high PPI number coming in on Friday is that essentially the long oil short Nasdaq trade is an inflation trade. You know, if you're going to make that trade, you want to see inflation being stubbornly high, the Fed having to maintain high levels of interest rates to try and crush the economy, and as a result of all that, the oils will do well. There's a complicated call to make on the dollar, which is sort of bouncing around at the moment. But if we did get a sustained move in the dollar, perhaps a weakening, that, of course, also would be bullish for oil prices. One thing's fairly certain is the Biden administration is not going to get a whole lot of help from the Saudis here, much as they would love it. And, you know, we've heard comments, maybe true or not, that within the White House, their hair is on fire regarding gasoline prices and the fact that gasoline prices are going to go higher. They could pull down more SPR, and we've been quite neutral on this actually, because we feel that US oil and gas production is so high now, and we're such a big exporter, that the real rationale for the SPR is gone, which was to say the US was such a huge importer of oil and gas that you needed an SPR in case of outages. But they're not going to get outages, at least not nefarious outages, from Texas and North Dakota and the Marcellus. So you really don't need to carry that much emergency inventory relative to what you carried 20 or 25 years ago. So while you can make the SPR graph look very scary in terms of how much the government has pulled down, it could actually almost be pulled down further without any great security risk, in my view. And I think the administration, if prices keep going up from here, will probably want to do that, especially as I don't think they're going to get any help from Saudi until oil's probably in the 90s. So that's that. It's all about the oil price, as always. On the companies, Suncor reporting today, market didn't like it too much. Lifecycle won't return my calls. We like Lifecycle, but it's irritating that they won't get back to me. Stock is off quite hard today, even though it looks like progress on their major Rochester hub is going fine. We've got Cisco Systems as the standout in tech. If you want the short Nasdaq long oil trade, I'm not sure Cisco's going to do that badly. The stock is not that expensive. It's on 14 times forward earnings. So it looks like it won't be a complete blow up, even if it misses. And then we have the Walmarts and the Home Depots and the Targets reporting this week, which will be more insight into consumer behavior, which continues to drive the US economy as always. If the consumer starts looking significantly weak, as manifested through those results, it feels like everybody's just shoplifting, to be honest. But if that consumer is weak, that could be negative for the market too, especially if oil holds on the Saudi control of the market right now. I hope that makes some sense. Welcome to East Hampton. Reason people love this place. No development, just long white beaches. Have a great day.